Welcome back to Main Street Informant. In this channel, we provide information related to wealth, money, power, finance, business, and economics. In today's video, we will talk about Americans' growing debt, what it means to their economy, and what can be done to aid this crisis. By the second quarter of 2022, American households owed $16.15 trillion, a staggering 41.79% growth from $11.39 trillion just 10 years earlier. Consumers who are heavily indebted are having a hard time getting by. They are having trouble paying their rent or mortgage, repaying their student loans, or paying off vehicle loans. According to a number of recent studies, due to an economy that has created the greatest inflation rate since 1981, Americans are finding it difficult to keep up with the prices and are saving less money for emergencies or long-term financial objectives. They are having trouble due to their significant credit card debt. In a survey of American people, 60% said that their level of debt was the main source of their money worries. Within the next 6 months, 43% of Americans are anticipated to increase their debt levels. Debt is used to finance the purchase of assets like homes and cars, or pay for expenses like medical bills and schooling. Additionally, when the cost of these things rises, so do the loans that are obtained. As of the second quarter of 2022, 48% of consumers said that the rising cost of basics had an impact on their family's lifestyle, up significantly from 39% in the first quarters. The pandemic, wars, and other global events have had unprecedented impacts on the American households' finances. Surprisingly, it is believed that many Americans were able to improve their financial situation as a result of the COVID outbreak. Since the pandemic, the overall personal savings rate has averaged 12.6%, compared to just 7.25% between the Great Recession to February 2020. Additionally, in 2020, Americans paid off a record $83 billion in credit card debt. The United States government provided all kinds of support to assist people in navigating this historic catastrophe. They provided mortgage, student loan, and other types of debt forgiveness to the low-income families. During COVID, the government took a lot of action to assist many families and families that were struggling with debt. Sadly, all of those are now lost. Additionally, interest rates are on the rise. The Federal Reserve has already significantly raised interest rates. They have stated that they will raise interest rates further in order to control inflation. Housing debt makes up the majority of American debt, or 72.5% of the total amount owed. Today, nearly half of all Americans feel that a major issue is the lack of affordable housing. During the pandemic, there has been an extraordinary property price increase, part of which is due to supply-side limitations alone. The majority of non-housing debt is made up of student and vehicle loans, which accounts for 35.7% and 33.7% of the total balance. Between 2000 and 2020, the cost of attending public 4-year colleges increased by 179.2%, an average of 9% increase each year. The majority of Americans believe that their earnings aren't keeping up with inflation. Over the past year, the average real hourly wage for all employees fell by around 3%, while inflation rose by 8.5% during the same period. Although it cannot be said that wages aren't rising at all, they are not increasing quickly enough considering the high cost of living that Americans are experiencing. Recessions can be predicted by looking at household debt levels. Additionally, the possibility of families paying more for a deteriorating asset will probably have a negative impact on the economy. To safeguard themselves against an economic shock, consumers need to address this issue. 43% of Americans, particularly young people and parents of young children, anticipate adding to their debt in the upcoming 6 months in order to make ends meet, to fill the gap between what they need and what they can afford. The majority will turn to credit card debt. According to Matt Scholes, LendingTree's chief credit analyst, the truth is that debt can be either a sign of confidence or a struggle. Some people take on debt because they feel good about their financial situation and are not too concerned about paying a little interest if it gets them what they want or need. Many others take on debt because they have to. The percentage of banking customers who regard themselves to be financially healthy has drastically decreased over the past year, which is a sign that the majority of people's economic well-being is beginning to be impacted by inflation. According to J.D. Power research, Americans' overall satisfaction with their financial situation has reached a 12-month low, while the percentage of people who consider themselves to be financially unhealthy is as high as 64%. This decline in overall financial health is primarily the result of people borrowing more, saving less, and having fewer safety nets in place, such as insurance and emergency reserves, which negatively affects their creditworthiness. So, what can the United States government do to lighten the debt burden for the American people? There are programs such as child tax credits. According to a survey, more than 77.8% of child tax credits were used to pay down debt in households. As a result, the effects on families' economics were significant. Say, for example, if the government is giving you a couple $100 because you have children when you are behind a couple $100 each month and in debt, you are now whole again. Another example is student loan repayment pause. This program helps families catch up on paying for other expenses. Most recently, the Biden administration provided targeted debt relief by granting student loan forgiveness to low and middle-income Americans. There are some types of debts that the government can play a crucial role to help reduce as well, such as the nearly 23 million Americans who are currently in debt for medical expenses. Advocates claim that the speed of policymakers' responses will determine whether the U.S. can control family debt. Interventions are absolutely necessary to ensure that Americans are able to reduce their debt loads, manage their spending and savings, and achieve their long-term goals. That's it for today. What advice can you give people who are indebted? Let us know in the comment section below. As usual, if you learned something valuable, please make sure to like, subscribe, and hit the notification bell for more contents like this. You can check out more videos on the channel and share. See you in the next one.